yes, 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 yes. Let's take this down. What is going on, man? Let me know you can hear me on, how did I lose my page, man? I came in too soon, man. I came in too early. I was not ready. Let's pull this up. We need to talk about oil, man. We need to talk about oil. Look at the XLE and the USO here. What is going on, man? Let me see if I can be heard on YouTube. We talk about oil. Look at the XLE and the USO here. Volume is good, baby. All right, what's up, Instagram? What's up, Instagram? On Friday, it's always low, man. People trying to get home from work. Thinking about Friday. Let's look at oil. This is oil based on the continuous contract through the USO. The USO basically charts the price of oil. It's not actually crude Brent. It is the United States Oil Fund LP, ticker symbol USO. USO tracks oil pretty good. It's not the futures exchange. It's not the actual, product itself of oil, but close enough. You could come up here and you could do Brent, B-R-E-N-T. There's a couple of versions of oil, right? You could go to the Brent. You could go to BNO, which is the U.S. Oil Fund, right? So if we were to look at the USO, it looks very similar, the BNO as the USO, right? And if we look at the actual price of Brent, crude Brent, or Brent crude oil, hold on. It was $90 and whatever, closing below the 20-day moving average, right? So that's where we see the state of oil at this moment. And there's different types of oil, right? But they generally flow together, different types of oil. This directly affects your life, right? And at one time, oil was as high recently as what? $125. I mean, usually not very good for the stock market. And today we find oil. Look at those moving average alignments. The money flow trading system uses the 20-day SMA. As a rule, if price is above the 20 SMA, which stands for simple moving average, we look to trade from the long side and price is considered bullish. If price is below the 20-day SMA, we look to trade from the short side or go to cash or understand that price is going down. Crank it up for the truck drivers. What's up, man? Right? So that green line there gives us a hint, is oil bullish or bearish? And right now it's below it, and the 5-day exponential and the 5-day and the 10-day are all below the 20-day moving average. And if you have them plotted on your chart, if you come over here, you're going to see 5 is at 92.44, 10 is at 93.35, and the 20 is at 94.15. So we're seeing a numerical alignment of the moving averages on oil. Now, it's still kind of trading in this little range here, though. I don't know. Maybe you take it down into there. I'm going to say right around in here. But here's the thing about it. If we look at the XLE, well, the XLE is the Energy Select Spider Fund. This is like the top 10, 15, 20 oil stocks. It's going to have shit like Exxon, Chevron, Conoco, Schlumberger, Halliburton, things like that. Things you've heard of. It's trading at 90. Does that look like it wants to sell off? So the stock market's red right now, last time I looked. Oil got hit at the open, but look what it's doing. It's back above the 20-day moving average. So we got the commodity itself down. We got the commodity itself down, but we got oil stocks up. So that's interesting. I hope you're seeing this, man. So what do we do? Well, we're long, and for myself, let's take a look at Exxon. I'm holding about 250 shares of Exxon, about 200 shares of ConocoPhillips, and about 100 shares of Chevron. So if you add that up, it's a little bit of money. Let's see, Exxon's at $111. That'd be $11,160 if you wanted to have 100 shares. So if you got 250, it's like $28,000, right? Well, if we look at ConocoPhillips, same thing. I mean, these stocks are banging highs, dude. They're not below the 20. They're way above the 20. And if we look at the money flow, and if we back it up, look at the money flow the way we normally do, right? I was trying to explain to a new person how to make sense of this movement here of price, right? This movement of price. And we kind of expected this inside of the money flow because we know when the RSI goes over 70, we anticipate that prices, that this measures the velocity of price movement, that it's probably run too far or too fast. Doesn't mean it's done going up, but it does trigger often stage 3, and often it even calls the anchor point, or the point where price locks in, and then that's it. That's the highest high or the highest low. Really should call it the apex for the stage 3 and the anchor for the stage 1. Because then apex is the actual definition of the word, is that it's a highest high. And the anchor would make sense for the floor, right? Stage 1, 2, 3, and 4. And this is just the random normal movement of price. And it's like, yeah, there's reasons for it. There's reasons for distribution, but distribution yet looks the same. And I don't need to know the reason, but I can look at a chart and I can see it, right? And if I see price break up or break down, I don't know why. It just is. I could go look to see. And maybe that information would help. It might help give you a game plan, but it is what it is, man. So we have a weakness in the price of oil itself. What's up, Curvy? Hope you guys are seeing this, man. Super important. I hope you caught it on your own. Hope you didn't need me to tell you. The most effective tool we have for determining trend direction and value is the moving average. The moving average is simply a picture of price. It helps us discover value. The moving average can give us insight into the short-term, intermediate, and even long-term picture of the market. We can gain insight into the direction of the money flow into or out of the market, individual stocks, or a commodity. An important concept to understand about moving average is that it's a lagging indicator. What's up, Paul? So these are lagging. And the reason we use different ones is short-term, intermediate, and long-term picture of the market. And when all three converge, you tend to have these mega movements. And even this golden line right now, what do you see? Oil is now below it. So the intrinsic value of oil is, we would say overall, the big picture is bearish, and the short-term picture looks to be bearish, and the intermediate term picture seems to be bearish. And by short-term, I mean price is below the 5-day moving average. You can't get much shorter than that, 5 days. And if price is below that, well, look, there's the average price of the last 2 weeks. It's below that. If you look, it's below the average price of the last 20 days. And if you look, it's below the average price of the last 200 days, numerically aligned, 200, 20, 10, 5, and then price. I know when you looked at a chart this morning, you got all of that, right? Did you catch that? This is like when the suns and the moons and the planets align and they go, hey, on September 12th, shit's all going to align. You're going to see something in the sky. That's what this is, man. That's what you see. It needs to come to your attention. Catch these things, man. If you catch these things in life, whether it be in land prices, real estate, stocks, commodities, when you can see the signs, begin to put it together, your timing doesn't have to be perfect, right? It's the repetition of process, man. But if we look at the stocks themselves, look at Conoco, look at Chevron, what do we see, man? I was trying to explain it to a guy on how to, let me give you the chart. And I'm not picking on you, sir. I just want people to see. So if you've rolled with me a minute, remember the previous, when you first look at this pattern, right? You have to look at a chart and then draw it backwards. And they say past performance is not indicative of future results. It's not. But I need the past in order to outline this. So like I may say it's a stage 3 and you're like, maybe that's a 1. It's like, no, it's a 3. Why? Because the previous one was a 2. Right? And so I'm just in the flow of this. Let me show you the chart. And and honestly, it's not something I encountered a lot until I started teaching this, because that was just me looking at it. And I wasn't seeing it from other points of view, right? I was seeing it from the way that I had done it. So if I'm looking at this, and this is just a fractal pattern of price, man. In the front of the money flow, I say this. A fractal's a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They're very similar. They're complex but similar. Hurricanes, tornadoes, ocean waves, wind patterns, stock market patterns, railroad transportation, things run in cycles, seasons, migration patterns. The universe is filled with these, man. It's filled with these. In December, you start to think about the same shit. In January, you want to set goals. And by February, it's a pattern. These patterns are throughout all of life, and people who can spot fractal patterns can take advantage of them. They are created by repeating a simple process over and over again in an ongoing feedback loop. The ongoing feedback loop is it keeps going every day. Driven by recursion, fractals are images of dynamic systems, pictures of chaos. So this is chaos, what you're looking at. So what the indicators do and the moving averages, oh man, I wish you got this like I do. You go to bed looking at this shit in your head. You ever watch people play chess? They don't even need to see the board anymore because they see it in their head. So my man thought this was a stage 1. And, I'm looking at this, and for the life of me, I'm trying to see that. Stage 1, huh? I mean, if we drop the time frame down to an hourly chart, maybe we get into a different configuration. But if I go back and look, where did price last break above the 20-day moving average? We had a series of them, right? It was breaking right into here, right? And so that tells me this is a stage 2. And that means that was a 1. And that means this was a stage 4 decline, right? And that means this was a stage 3, right? And so as I start to draw the chart backwards, it gives me where I'm at today. And it's like, hey, past performance. And I know that. Now, a 3 can become a 1. If this RSI works off, we know that. If these indicators set back up, if they get set back up right, yeah, 1 can break out again and run. You could do that. But right now, looking at it, it's not a 1, it's a 3. So as I look at this, I say, okay, it's a 3. Did the RSI go extreme near what we call it would be the anchor point or the apex. Let's see. Right around in there. And now it pushed a little higher, didn't it? So the RSI never went extreme. Has it ever stopped here before? Jesus, let me clean this up so you can see this. So one of our rules are wherever price has been before, price can go again. That's usually our target, and that's where it tends to stop, right? And so if we look where it stopped before. When we talk about stopping, what we're talking about, these zones of consolidation, these boxes. Takes a minute to see them, right? But you can see them. They're not all perfect, but they're zones. And where price has stopped before, it can stop again. That's how you get things like support and resistance, things like that, man. So it ran up. The RSI didn't go extreme, but it did stop where it stopped before. And now it's starting to move sideways. So if I was looking at this, I'd say, okay, this is a stage 3. And that means it's either going to break down or maybe over time it works those indicators off and it becomes a new stage 1 and it could run again. And one way we could guess on that, and that's 1-800-FLOWERS. FLW. Isn't it? FLW? Oh, FLWS. Yeah. So look, they got it at a 57% discount. So if I'm watching this, would I buy here? No. Because I can look back on the chart and I know, okay, if I was in the money flow, I would have got in here, right? So what I'm looking to do is catch the big down move and then the sideways. So I'm trying to catch stage 1s so that I can catch the breakout and ride it up, right? So I'm trying to get on the other side of the transaction. If I'm a short seller, I'd be trying to catch stage 3s and then catch the breakdown. And as it starts to break, I want to get short, right? And my target is what? The anchor point. Or what I would look for, anchor point as far as, okay, maybe now we have a bottom. They would be wanting to, hey, that would be a target point for them. And so as this comes down, if I'm looking at it from over here, I know the buy was over here, man. And you're like, well, how do I know that? Exactly. You got to follow stocks, man. And so what if I found this one, let's say I just read about it and I found it and it's 56% undervalued. I'm like, cool, it's getting a sell signal. Sweet. Why? It means it's probably coming down, man. So as I watch the money flow, I'm like, all right, bet this thing's undervalued by 50%. Bring it down. And while I'm waiting for this to come down, right? If it doesn't, okay, cool. If it sets up as a stage 1, we know what to do. But this has got to get worked off. This is going to get set up for a minute. So I know I have time if that happens. But if it breaks down, now what? I'm going to wait for it to go where it was before, right? So then that would be sideways, up, sideways, down, sideways. And that would be a normal money flow movement, and it's still 50, 60% undervalued. And so how you traded that would be based on your time frame. And so a guy right now, if I was in it, and we were swing trading it, I'd probably be looking at taking it down and locking in this gain. Unless we're position trading it. What do you mean? I mean, if I'm position trading it, I don't want to buy here. What do I want to do? I'm trying to buy these, man. Right? Even if they're higher, I want to buy the lows. I want to buy that one. I want to buy this one. And then as this thing runs, right, I've brought my price point down and my trade time might be a year, 2 years, 3 years, right? Or until it's fair value. Well, if this thing is truly undervalued, and it may legitimately be undervalued right now, there could be all kinds of interest rate problems and the market's just not doing well and they're having supply chain problems. It doesn't mean the company's not worth that. It just means investors aren't willing to put their money in that right now because they question whether they're going to be able to continue earning money going forward at the same rate. So they're questioning whether this 19 value, people are guessing and saying, I don't think that's true. I think as they start reporting earnings, this is going to keep coming down and down and down. And it will, but analysts don't do it till after it happens. They're not in the fucking guessing game. See, so if you play a guru on YouTube, you can just make fucking guesses. If you work at a firm where you got to do analysis, they want you to make analysis based on what's actually happening. You know, and then if you might have a case, but you got to see it in the numbers, you got to actually see it happen. Here we go. Curvy says, who's buying flowers right now? That could be a good point. Maybe they are. I don't know. I'm just telling you, like if someone, because that stock came in front of me yesterday. A gentleman texted to me and he said, this is a stage 1, right? And I'm looking at this and I'm like, how the fuck do you get this as a 1 from my teachings? And I don't mean that negative toward him, meaning me critiquing myself as I look at this. I'm like, sideways up. I mean, is there any way that I would have explained the money flow where someone thought this was a 3, other than they're just new and they haven't caught on, which is totally fine. I'm just looking at it and I'm like, all right, moving averages come together. I mean, this is a 3 and now it's possibly breaking down into a stage 4. So, you know, was the disconnect me or is it they're just new? And, you know, because I think one of the things that when I confuse people, we talk about the anchor point. This is easier to do on a pad. But if we, let me try something. Trying to find a good example of a. That was a good trade though, man. That's a perfect swing trade. That's what you're wanting it to look like. But you want, on the money flow, we're trying to catch this bottom as quick as we can and then ride it up. And then, your only thing is you got to figure out what you're doing, and when it comes back, if you're position trading it, then you don't do anything. You let it come in. An example would be Uber and Lyft for me. Like, I let them come in, I pick up some more shares. If I got to ride out some turbulence or a couple years of people not liking it, that's all right, man. I'm an investor for life, man. You know that, right? I own stocks for life. And so I've talked to a lot of people recently, they were pretty beat up about the market coming down. I was like, well, what the fuck do you think was going to happen over the rest of your life? Like, at some point, things you own, the price changes. Price is just a social agreement. My last free ebook, and it's not free, my book, The Two Selves, How to Be 10 Foot Tall and Bulletproof, there's like 12 modules. They're not very long. The whole ebook's 32 pages, man, but it summarizes the way I think about everything. And if one of them is entitled Price is it's just a social agreement, meaning it changes. The social norms change. What's popular changes. The political parties, religions, what's popular, what people are willing to pay for, maybe wine or art or land or whatever, or NFTs or this or that or this or that or this. It never fucking stops. It just keeps going. There's always collectibles and always people getting rich. And if we go into recession, some people are going to prosper and get rich as fuck, and other people are going to go broke. And a lot of times the difference is what they were thinking about going into it, man. And if your asset price is moving up and down somehow is tied to your self-worth, you're going to have a hard time taking advantage of crises, right? So you got to kind of look forward to them a little bit. You got to kind of anticipate them. In order for me to buy a lot more properties, I kind of need the prices to come down because it was kind of getting fucking hard to buy houses. So, but what does that mean for the current houses that I own? Well, they're going to be repriced. The values change. Does that mean I don't want them? No. See, the value that you place on it is based on where you bought it, and you think somehow that's valuable to you. And it's not. You're the only one. So if a guy bought it right here at $9 and today it's $8.09, he's down $1. Well, if a guy bought the stock over here at $6, he's up $3. It's the same stock, guys. They own the same thing. One guy's underwater, one guy's up. I mean, you get that. It's right. It's clear as right there, man. And yet sometimes we'll form opinions on a stock or opinion on an investment or a stock based on what we paid for it. Well, what if the guy bought it over here? And then down here, he's like, man, I don't think my wife likes me as much anymore because I bought a stock that went down 60%. You might be upset about that. So this stock went from here to here, and you're like, fuck, man, I was an idiot. I knew I should have got out, right? But what if you never owned it, and this guy starts buying it here? And then now it comes up to here. Well, now it's back here, and you like it more than you did down here. And the guy that was here and wrote it down to here that almost got out, now it's up here. He's like, shit, dude, I should have bought more here. And see, his feelings and emotions change based on the arbitrary social agreement that it's given. Like, how do you value Bitcoin? It's just going to be whatever price comes up. But you're going to attach some sort of emotional feeling to that. That's either good or bad, depending on when you got in. But that's it, man. It only means something to you. When you get that concept, man, it's mind blowing. Let's see. Careful on the Tesla, man. Let's see. I'm in it too, but I was watching today. Let's see. All right. It seems to be holding. All right. My man's got... Oh, let me take this down. Shit. I'm all jacked up on the sizing now. Sorry. Now we're back. All right, we're looking at Tesla. Yeah, it's trying to hold that anchor point, right? So here's another example where we were talking about. There's stage 1 buy. It starts to break out, breaks down. If I'm holding it at this point, when this breaks right here, I'm not adding to this, okay? You get, meaning why? If we zoom in, what are we waiting for? I'm waiting for it to stop dropping here, right? And put in an anchor point. So I'm always playing off the last anchor point. So when you go to start trying to draw your chart, and I think that's what confused my man was, I'm like, bro, start with the last anchor point and then build out the chart. So draw it backwards. Where are you right now on that chart, man? So if we look at this, it was a stage 4 decline, went sideways, started to break out, and then it didn't work. So you had this little bitty money flow, and then down we came. And then what? We finally got an anchor point, which was the lowest low in the stage 4 decline. It's a stage 4 decline. Price is below the 20, 5 days below the 10, 10's below the, so it's numerically aligned, 10, 20, 10, 5, 10, 20, all pointing down. What are we waiting for? RSI to go extreme. So the moment that goes extreme, it tells me I need to start looking for what? Stage 1. I'm looking for this anchor point. And it takes a couple days for me to confirm that's an anchor point, meaning it stopped dropping. And it's going to start to drift sideways. I want to buy right there. Right? And what if it dropped again? I'd stop and I'd let it do it again. And then I'd wait. And that's called position trading. I mean, I'm trying to take advantage of price volatility to try to buy the bottom. And they said, well, you can't pick bottoms. I can buy all of them. Meaning it's going to do one and then that's the bottom and then it's not. And then there's a new bottom. Good, buy that one. And that would be position trading. That's not momentum trading. That's not scalping. That's not day trading. Okay? And that's not for everyone. Everyone can't sit through a ride down in their stocks. You know why? Because they start to attach personal wealth or personal value to it. They start to think, well, if they went down, I must not be a good investor. Depends on your time frame, right? Depends on your strategy. Depends on what you're trying to accomplish. Let me see. If you haven't, man, let me help you out here. If you go to chapter 7 in my free ebook, You Don't Have to Die Broke. Subtitles, How Ordinary People Can Become Extraordinarily Wealthy. There's so much in this book, man. I read it a lot. I go back and look at things, and this chapter is entitled Why Retiring Could Put You in the Poorhouse. The quickest way I can think of for you to go from wealthy to poor is to retire. There, I said it. The biggest financial mistake I see people make is giving up the idea of continuing to make money. Hey, if you want to quit your current job, that's fine. I realize doing the same thing year after year gets old and might lose its appeal. But before you hang up your hat, so to speak, and find your place on the couch, consider a few other possibilities. Now, as we dig into that, read through this chapter, man. I start to break down how to calculate how much you think you need. Man, when you begin to lay that concept over the dogs of the Dow here, right? Dogs of the Dow. Let's look at this year's. Here's one of them, Amgen. So people always ask me, what would you invest in first? I'm like, Dogs of the Dow. Why? Because it works. Makes money. Instantly produces passive income. Now it's small, but it does it. There's 10 of them. They all pay a dividend. There you go, 10 drips. But one of the things, I'm trying to find the spot in here. Where is it? It breaks down how to calculate it. And that may sound boring. Keep doing it. Go through there. Oh, man, did I lose it? Oh, and if you keep going, one of the sub things is your retirement fund, right? Where's it at? And the example I'm using, I think, is 75 grand a year. Oh, what's confusing about my book, You Don't Have to Die Broke, is I don't have page numbers. Oh, man. You don't have to get it right to get it going, man. You can have misspelled words. I've sold thousands and thousands and thousands and thousands of copies of this book, and it's filled with misspelled words. It doesn't even have page numbers. Huh? Now, in the ebook, you can click on the chapter. It'll take you there, but there's no page numbers, man. Isn't that funny? In other words, you don't even have to be good at shit. Let's see. To compensate for the volatility of the stock market, I recommend a simple 3-set retirement portfolio that should return at least 8% a year reliably. This portfolio consists of, and what I mean is year after year, this portfolio consists of high-quality dividend stocks, cash, and rental real estate. I would recommend an allocation of 50% of all your net worth into rental real estate, 30 to 40% into dividend-paying blue-chip stocks, and 10 to 20% in high-yield stocks like REITs, business development company, and closed-end funds, preferred funds. This portfolio allocation should protect you during stock market fluctuations. And it goes to break those 3 down. Now, that's what I've done. My ratio is a lot more in real estate to stocks. It's about 4 to 1, right? Or 3 to 1. 4 to 1. Because I feel pretty confident in it. And the returns, I talk about what you should expect from the dividend stocks, 5 to 10%. Let's see. Yeah, you should anticipate 5 to 10% a year. In the high yield, 6 to 8%. And in the real estate, 10 to 15%. Now that's, after expense. There's expenses involved, man. What's up, Andrew? Go through and read that. Chapter 7 in my free ebook. It plays a big part in this. Now, notice I didn't say trading. Trading is an active activity that you can do to try to make money. Absolutely. And I think a lot of your best trades will come from your buy and hold stocks. Like, what's up? Like, so a lot of your best investments, our best trades can come from your buy and hold. So in chapter 10 in there in the ebook, I talk about the dogs of the Dow, right? It's a 100-year strategy, averages about 9-10% a year. You got $1 million in there. It's growing at 100,000 plus a year. You're doing nothing. You're just getting money, right? And you'll see some of the richest families in the world. They got 10 million in this one, 10 million in that one, 10 million in this one, 10 million in that one, and they're just collecting money, riding the wave of the market. But inside of that, like this is Amgen. So if we're looking at the pattern of the 4 stages of price movement, and I'm watching this as a trader and as an investor. So as an investor, I don't want to buy overpriced shit on stage 3s. So would I want to buy this right now? Would I want to buy, where'd we go with that's Chevron. Would I want to be buying Chevron here? So if I'm looking at the money flow, what does this look like? No, this is a stage 3, right? Here is my stage 1. There's my breakout. Prices run up, and now we're building out a stage 3. If I go check what is the fundamental value of Chevron, and we say if I was going to write a check and just buy the whole damn business. Oh. Come on, Gerald, get your ticker symbols together. What do we got? It's trading at a 24% premium. So as an investor, I'm not talking about scalping and day trading and all that shit. I'm saying as an investor right now, if you're looking at this and it's trading at $181, it means if I wanted to buy the company, the stock is trading 20% over value. So if I owned a house and it was worth $100,000, I'm looking at you going, give me $120,000. And you're like, but your house is only worth $100. I know, but I want $120 because I think it's worth it. Why would people do that? Why is this trading at a premium right now? Well, people, oil got hot, right? Oil ran up real big. They wanted these dividends. These oil stocks became almost a safety trade. Does it stay that way? We're sitting on a stage 3. All oil stocks are overvalued, and the price of oil itself is bearish. It's trading below the 200. 5-day, 10-day, 20-day, everything's pointing down. The RSI is not even extreme yet. So oil is now in a downtrend. God damn. What the fuck? Sorry about that. Oil's now in a downtrend. I hope you're seeing this disconnect. Now, we got some leveraged oil trades on. I got my finger on the trigger, so to speak, to close those out. We're up 55% in our leveraged oil trades, the ERX. Okay? That's trading. That's trading. And if we're talking about building out a portfolio of assets that produce passive income, back to my book there in chapter 7 where I was talking about how to calculate your retirement, but calculating your return. And if you're 32 and you know, okay, I got 20 years, I'm going to do this, you can actually begin to insert numbers, take guesstimations, and kind of calculate out 20 years what your return would be and what you'd be making running that strategy. And if you're like, well, man, I'd like it to be more, put in more. You ain't got to wait 20 years. You only got to wait 20 years to do that, because it normally takes people that long to put that much money in. But if you can accelerate that, put shit tons of money in there, they're going to give it shit tons of money back to you, right? But as I watch this, as I'm watching Amgen, and I'm a trader, guess what? I can watch this and I go, wow, look, sold off. It's going sideways, right? And now what? I see a breakout. Price starts to break out. Well, I own it as an investment, which means I follow it pretty close, man. So now I can catch a breakout, right? And I can trade it. And it depends on how tight you want to trade it. If you're trading super tight, momentum trading, what? I'm taking previous high as my target. And then I let price drift and take it off with the RSI. And then what? Wait for the stage 3. And I'm looking to get out when it starts to roll over. So I might trade it in those kind of stages, man. Putting on the most down here, and I start taking it off as it goes my way. And so by the time we top out into a stage 3, I don't have much money on it. So if you go look at ERX, right, very similar to Amgen here. The reason we took the oil trade is we follow oil every day because we all own oil stocks, man. Some of you have friends that are too stupid to own oil stocks. Like, you hang out with them, they don't own any oil stocks. That's crazy. It's crazy to me, man. I have friends like that. It's like they don't want free money. Like, they don't want dividends. They just don't want them. They don't buy them. They must not want them. And they could say, well, they don't understand. It's like, why not? Well, I don't know. Well, do it. So as we watch this, right, we can be aware of what's going on. And if we look at this configuration here, it's the exact opposite of this configuration, right? Ran up, topped out, right? And then what? Sold off, then went down. What are we seeing now? It's run up, topped out, and what are we starting to see? It's starting to roll over. It hasn't happened yet, man, but we need to be aware of what we're witnessing, right? Well, if you're a short seller, well, let's drop this down to a 1 hour, man. Can we see money flow patterns on the 1 hour chart? I mean, I can. See it, man? I don't trade this tight, but you see them? Remember we said, what do we say in the money flow? The money flow trading system uses a 20-day simple moving average. As a general rule, if price is above the 20-day moving average, we look to trade from the long side. If price is below it, we look to trade from the short side or consider the move bearish. If price is below, right? So as we look at this, we can look and see. Now, remember, this is on a 1 hour, so the pattern's different. And what you might could say, okay, well, it's kind of trying to do a stage 1. Is it, though? Did price go extreme? No. I don't know, man. I don't see a 1 yet on that. It could. And you see how looking at different time frames can change your perspective has changed. We'll see if price holds it. We shall see, man. I hope the reason for today's class, I was just trying to bring your attention to what we're seeing. You should see this. You should be the kind of person that sees this, man. You should walk around in life and fucking notice things that could pay you and create money and wealth for you and your family. The money flow is all around you. There's all these tickers and businesses and opportunities. You got to be tuned into it, though, man. You got to be looking for it, man. You got to be looking. And it's like in your mind, it's like, where's this? Where's that? Where's this? Where's that? Like all the time. Just Like you can see it, and the more you can see it, the easier you can process it, the faster you can process it, and the more opportunities that can come to you, and the faster you can process them and create multiple wells, multiple streams, which allows you to generate more. Some people are limited on their income to their job. I never had that problem. I never ever had one way of making money. Not since I was a kid. I've never done that. You're fucked, dude, if you're doing that. Seriously. You figure out how to make more than you make at your job on the side, it changes the way you function at your job. You get more confident. You do it with more, you know, you're a different employee, man. You see opportunities different. When you're dependent on the money you get from your job, you put yourself in a very vulnerable situation. So my whole life is like, I need to make money 2, 3, 4, 5 ways if possible. That's just been me, man. I can't have where if someone, you know, maybe I get disruption, like they let me off, there's disruption, but I need other ways I'm making money, man. Because then by being able to do that, you're able to play these games here at a much larger level. You know, so you own 15,000 of this and 20,000 of that and 30,000 of this and 70,000 of that, 300,000 of this and 500,000 of that. Yeah, shit that costs $500,000, you own it. You can get it. It's called down payment. You know, buildings, apartments, dividend stocks, like in massive ways. And it's not $4 fucking dividends. It's $400 dividends. Like you got to start thinking like that. You're not going to think like that with a job. You got a single job. That's it. You're always going to be broke, man. You're barely going to have enough money. By the time you pay bills and do all this stuff, you're going to be investing the crumbs. Yeah, I lose them all the time, guys. If they lose them all the time, man. They lose a job, so they got to quit the group. Like, why would you be so vulnerable, man? And if you are, fix that. You know, and then people say, well, how do I fix it? Start thinking about it, man. Thought, creative thought is the ultimate. It starts with thought, man. Chapter 4, Science of Getting Rich. First principle in Science of Getting Rich, thought. And if you don't have a philosophy on it, you won't get it. I played this video on my story the other day, and there was this Jewish rabbi, and people are saying, well, if you got your health and your kids are healthy and you got a good family and everything's good, then you're rich. And it's like, no, you're not. You got a family and a nice house and everything's good, but you ain't rich. They'll try to hijack that word, man. What are they doing? They're downplaying it. They're like hijacking the word, man. You don't have to do that, man. Thought is the only power which can produce tangible riches from the formless substance. The stuff from which all things are made is the substance which thinks. And a thought of the form in the substance produces the form. Original substance moves according to its thoughts. Every form and process you see in nature is the visible expression of thought and original substance. As formless substance thinks of a form, it takes the form. And as it thinks of motion, it makes that motion. That is why the way all things were created. We live in a thought world, which is part of a thought universe. And a thought of a moving universe extended throughout formless substance. And the thinking stuff moving according to that thought took the form of the systems. And he goes on and on. But that's some flowery language, okay? Is what that is. But the point is, it starts with thought, man. Like thinking on it. And that's the start of everything, man. Right? You sit and think on it. So the reason people don't have like oil stocks, they don't think about oil stocks. And if you don't have this stocks, because you don't think about them. And sometimes people are like, do you have any of these? And I'm like, no. And he's like, well, I don't think about them. It's not something I think about. So the other day I started thinking about cell tower stocks. I'm like, why don't I have any of those? I don't know. I just hadn't thought much about it. So as I began to think about it, it causes me to search something. And then as I search something, that causes me to think and read an article about it, which then causes me to, you get what I'm saying? And a chain reaction begins to happen. And so the things you don't have, you've just never fucking thought on them. You haven't sat there and thought. And thinking is the hardest work of all. It's the hardest work of all to sit and think on it, man. Man, oh man, oh man. Said he bought more Amazon. You guys got me fired up today, man. Yeah, hopefully these hold the anchor point. We're all playing off this anchor point right here. So stop buying if it breaks that anchor point. Anywhere in this zone in here is fine. If that breaks, just give it a minute and let it set up again, because it's probably going to run lower. So man, I was going to go deep on that retirement section from the You Don't Have to Die Broke, but I got sidetracked. If you don't have that book, get that book. I got both hardbacks. I got stacks of them, so I'd be happy to ship out some hardbacks to you. Just hit my link. Keep an eye on oil, man. Instead of running through a bunch of stocks, I don't see the value in that. I've been trying to focus on one specific stock, mainly on the lives, rather than just ripping through a bunch, so you can start to see them a little bit deeper. Notice that correlation between oil, the commodity, the XLE, which is the actual energy ETF, and the top stocks, Chevron, Conoco. Now, you can go another level. You can get down into the different levels, the drillers and the shippers and the, all that. You can take oil and go down another level, and you can just peel it back like an onion. But it all starts with oil, the commodity, the USO, and XLE, which is the main ETF that holds the stocks. And then inside that ETF are the top 10, 15 oil stocks. Right now, you just learned a shit ton of information that your friends don't know about oil and how to follow it every day and how to prosper. Your family should be prospering from these commodities. You know that, right? So if we remember, we got into silver here a while back because silver was below the 200, So we sold some. We might be selling some more. So if it comes back down here, we'll set up for that same trade again. And if we can just chip away and make some money trading silver, why wouldn't we? It's there every day. So why don't we pay attention to it, right? And then there's others too, man. We've been doing this nat gas trade, right? We're trying to do this nat gas trade. We're still above the 20, man. Still in a buy zone. It hit our first target. If you were in Boyle, you might have, that's a triple leverage version of this. I'm not in the leverage. I'm in the unleveraged, but it hit our first target and came back. So it's still a buy, but we're looking for it to run to $31. I think the pressure on oil today has kind of brought it down, but that's a trade, man. Natural gas. It's not complicated. You don't need to be Farmer Joe. You don't need to understand binary or options or calls or spread. You don't need to know any of that shit. Just learn the price and then find it in an instrument that tracks the price and start learning to execute trades and keep it simple and stop trying to be fucking fancy and get it together, man, and get out of debt and get your shit right and get your portfolio correctly balanced and stop making excuses. And in 3 to 5 years from now, you should have a shit ton more money than you have right now. Or you could just choose not to. That's a choice, right? So you got everything you need here, man. Money flow is going to show you how to do it, especially if you're a buy. If you're a buy and holder, the money flow is like, come on, man. It's stupid easy, right? I mean, we got 10 strategies that are, and then inside of that, remember Cisco, we talk about the bread and butter strategy. Anytime a dividend stock falls at a huge discount below this yellow line, which is a value line, I don't know why you guys even have other books, man. If you just have my 2 books, your brain can't even hold all the information. Let's see. 200-day SMAs are long-term consensus view of the market. Oh, I can't find my bookmark on there. So when these dividend stocks get below there, we look for stage 1 setups in the money flow, right? We're looking for these stage 1 setups. And our target, if we're trading it, is this 200. Bam. That thing works so much, it's shocking. It just takes patience is all, man. What's up, man? So if you haven't mastered that strategy with me, man, you just suck. I don't know what to say. Man. You should have mastered that. That thing pays all day. Those trades are so easy. Like, those are the ones you should be focused on too, especially when you're just beginning. Because it's going to teach you about dividends, it's going to teach you about, Stage 1 is going to teach you about different sectors and values and the line. I mean, there's so much going on in there. It's crazy, man. If you're not doing that, something's wrong with you, man. Like, get it together, man. What's wrong with you? Get it together. Let's see. What's up, Corey? All right, Money Flow Gang, I appreciate you guys. I was yelling at all the new people coming on. Not you. I know you got your shit together. Or at least I hope so. Or at least you better be. Let's see. Somebody asked if I was adding the Hanes brands. I haven't yet today, but you could add here. I've got a shit ton of it. So, yeah, you could add today. It's about the only good one out there. If you're on my email list, I sent that out today. If you're not on the email list, if you just go to the newsletter and go to the very bottom, petersreport.com, if you click that button, it'll take you to my emails. I only send 1 or 2 a week. Usually if I think it's something that's useful to you or something I want to bring your attention to. Oh, Bark was in the email. So this is a penny stock trade I got going. I got stops on it. But you know how I do stops pretty loosely. And it's come down since I sent the email. Stage 1, we're trying to play. It's a $2. You know, they say it's worth $5. I'm trying to get $2.40 out of it. I got a $1.50 stop, man. So it's in the newsletter, man. Talk to you guys later.